What divides the overnight success from everyone else is that the overnight success was able to get through the night. And the night is coming in the stock market. We can see the sun setting. Hey there, Lincoln here from bullacademy.org. Today, I want to just make a plea to you. Of course, as you know on this channel, this is not financial advice. I'm just saying this, share my own thoughts on investing in the stock market. And all I want to do today is ask you to stay in the game. Because as we've covered on this channel so many times, time in the market beats time in the market. So if you stay invested, you have a much better chance than those who try to get out and get back in on dips and on all the peaks, trying to time where to get in and get the best deal. We've just seen so many numbers that say if you stay invested, you're going to have the best chance of building outsized wealth, outsized returns. We've seen time and time again that what divides those who build long-lasting, sustainable wealth is that they stay in the game. They survive. They keep invested. They stay in to see another day, to reap the benefits of staying invested, staying at it. And this, I keep repeating this, but it's very important that you understand that that's really the main variable between those who succeed on the stock market and those who fail, those who try to time the market and then get burnt on the way down and then see FOMO on the way up. They buy the top and then it goes down again. They get afraid and they sell out. They lose their money. The only thing that divides those who are successful is that they don't try to time the peaks and the valleys. Instead, what they do is find great companies that they believe in, do their research, and then they stay invested in them. And they buy on the way up and they buy on the way down. They buy in the middle and they hold. It's just holding. You buy, you hold. Warren Buffett says it all the time. If you just find great companies that you believe in, you hold them, you will have such a great chance of actually doing well and not losing money on the stock market, which is rule number 1 by Warren Buffett standards. Don't lose your money. And the easiest way to lose your money is by trying to time the market. By listening to all those analysts who say, oh, the big crash is coming. The next big great reset is coming. You should sell now. You should get out now and then get back in once it's all over. Bro, who's to say when it's going to be over? Who has the clock that can read the future to tell you exactly when a downturn is going to be over and everyone's going to want to buy back in again? Have you heard from anyone who says they can read the future? Because none of those analysts tell you when the recovery is going to start. All they tell you is, hey, you should get out now. All they do is fearmonger. And you know what they do after you sell? They go in with all the money they have from everyone else who invest in their funds. They take all that money and they buy your sales. They see you selling and they go in, they buy, they get the great discounts, and then they hold on and make a lot of money from your fear, the fear that they were mongering on CNBC and all in the Fox businesses. They want you to sell so that they can buy in because they know that people get so easily afraid of losing their money. And they also know that people don't understand that they have a much better chance of not losing money if they just hold on. If they just invest money that they don't need for the next year, 2 years, 4 years, because most downturns, most bear markets and crashes take anywhere between 2 to 4 years to recover, to get back to the pre-crash or downturn levels. Some even take a couple months. So all you gotta do is only invest the money you don't need, that you have no fear of losing in the short term. That way you won't have to sell because you won't need that money. And once you do that, once you change that mindset of saying, hey, I'm not going to try to get rich quick. I'm not going to try to put money in and get it out next month or next year. If you say, I'm going to put this money into a great company that I know, understand, believe in, and plan to hold for the long term, you will do so much better than those who are trying to trade options and time the next downturn and listen to the big short guy and all the analysts on TV telling them, hey, you should sell now because the markets are so frothy and you'll be dumb not to sell now. Well, it's dumb to try to time the market because we've seen over and over. I actually have numbers that tell us all you have to do is hold.
Hey there. I just want to ask a quick favor before we continue. First, thanks for taking your time to watch this video. We hope you're enjoying it because it was a labor of love to make. You can help us continue to make more videos like this by simply liking the video below, subscribing to the channel, and commenting any thoughts you have. Even if you just want to say hi, it truly helps the channel grow and is important to the YouTube algorithm. So before we continue with the video, please don't forget to like and subscribe if you're enjoying it. Thanks in advance, and let's get back to it.
So if we go to Google and we just Google how long most bear markets take to recover, they tell us it takes 289 days. We have a list here of the history of the S&P 500 bear markets. And the S&P 500 is pretty much a broad market index of the stock market. So this is a good indicator of the entire market. Of course, it's not a complete indicator, but it's what we use to track the market's movements and track bear markets and crashes to see how long it takes to recover. So when we look at these numbers, we can see that going back to 1929 through 1932, there was an 86% drawdown, which a downturn, stocks going down in the S&P 500. It took 998 days to recover. That was a very long one. That was the longest one. And then in 1937, there was a 54% drawdown. That took 390 days, so just over a year. In 1968, we had a 36% drawdown, and that took 543 days, so less than 2 years. And then in 2000, the dot-com bubble popping, we had a 49% downturn in the S&P 500. That took 929 days to recover, the second longest. In 2007, the housing crash to 2009, we had a 56% drawdown, which took 517 days, less than 2 years to recover. And then after that, we had 2011 and we had 2018. 2018 was negative 20%, and that took 95 days. That's a pretty short period of time for all of these. The longest one was still less than 3 years, just over 2 years. And that was back in 1929. So we might see more and more crashes, and it's pretty much guaranteed that every 5-10 years you're going to see some sort of crash or downturn. But the good news is that we've seen it consistently recover, and the stock market has consistently gone up and to the right. No one can tell you otherwise. In the United States of America, our economy recovers every single time. Every time there's a crash, every time there's a recession, we learn from it. We create new industries. We create better industries. We improve our technology, which decreases cost, improves productivity, which means more and better products in the market, in the economy, going around, which means more profits for businesses in the future. Sure, there's the economic policies from the Federal Reserve, and they're going to increase their interest rates and to bring down inflation, and then inflation is going to go up and interest rates are going to go down, and so forth in that cycle. And within that cycle, we'll get recessions. But you know the cycle. You know every 5 to 10 years, you're going to have a drawdown that might take you anywhere from a few months to 2 or 4 years to recover. And so far what we've seen is it's taken less than 3 years since 1929 to recover from these downturns, these large downturns. And so the largest one we saw was 86% in 1929, and since then it was 54% in 1968, I believe. And the numbers kept getting lower. In 2020, we saw a month-long downturn with the thing that should not be mentioned here. You know, the thing that happened to all of us for 2 years so far, and we've been stuck inside. It's great to be outside again. Got the stars above my head. This is beautiful. I had nothing to worry about. Life is good. I was out here earlier. There was kids running around playing. They had no idea there was a downturn and a great reset. The country's doing well. We have our kids, they're going to school. We have vaccines. We have electric cars. We have so many great things. The internet is still thriving. People are creating new industries. Businesses are doing well. Sure, there's a supply chain issue. Sure, there's wars. But these things have always been here. We've always had problems. But these kids, all they know is that life is good. They're running around having fun playing basketball. They're staying in the game. So if they believe that everything's all right, they don't care about these great resets because they're living it day by day. All they know is that the country's doing well. They don't have anything to fear. You don't have anything to fear either because this country is doing extremely well. What you're investing in is the country. So if you believe the United States is going to be here for the next 10, 20, 30, 50, 100 years, you're investing in that this country is going to be successful and have staying power and won't just completely go away. Because the businesses that operate here, they operate within the confines of this country, within the policies that are and the regulations that are put in place. And so you see people say, oh, the United States stock market is out of control, it's frothy. Well, we haven't had anyone trying to invade us in a very long time. You know, that whole Civil War thing that happened, that was an invasion of sorts, right? That hasn't happened in a very long time. We don't have enemies attacking our land. So unless we destroy ourselves, I believe this country is going to do very well. We already have all the power. It's very hard to lose power once you have it, so long as you keep it within checks. And so long as the government works the way it's supposed to, and we keep our government and we hold our government accountable, and we maintain a democracy, I believe in this country. And so I believe in the industries that are here. And so I have no reason to fear that the whole market is going to completely vanish in the next 5, 10 years, 20 years, 40 years. So I'm looking down that far and I'm saying this country is going to do much better than what it's doing today when that time comes. And so if I believe that, I'm going to invest in the businesses that are going to get us there, to that bright future that these little kids believe in. That's all they know. They don't know about the stock market. All they know is that things keep getting better. They have phones in their hands, smartphones. When I was a kid, I could barely get on AOL, dial-up. Didn't even know what that was until I finally got a home computer in a huge box. Now these kids are running around with phones in their pockets and as they play in the park because industry is successful. So these kids tell me all I need to know. They're doing well. They're happy. The industry that enables all that we do, me coming out here to you, recording a video in the dark at a basketball court at night with a nice bright light and a camera and a microphone. These are things that have been improved so much so that I can do exactly what I'm doing now for very, very inexpensive amounts of money. So all I've seen throughout my entire life is that things get better over time. I have no reason to believe otherwise. Of course, as I said, we can destroy ourselves from within. We've seen that on January 6th of last year. So I know things can go bad, but the chances of things going catastrophically are pretty low. There's an asymmetric chance of that happening. And as we've said so many times on this channel, the holy grail of investing is asymmetric risk. So when I see something that has a greater chance of upside and a greater chance of greater upside than downside, I'm going all in on that. I'm going all in because I don't have much to lose. In the low chance that things go wrong, I'm going to lose less than I stand to gain. That's asymmetric. It's the same deal when you invest in the stock market. You have an asymmetric chance of succeeding if you just stay invested. You just stay in the game. Stay on the court. Don't take your ball and go home because things are turning red. Take your ball and keep shooting your shots. But if you don't want to take any shots, just keep your ball on the game. Pass the ball. Let your team play for you. You just watch. And they'll stay in the game Your businesses continue to make money. They'll continue to sell products to customers. They'll continue to grow their revenues. Maybe a little slower because interest rates are rising, but they'll continue to do business. That's what you're investing in, that the business can continue to do business. You're not investing in poker chips or monopoly money. You're investing in an actual business. You're not investing in some meme stock, or at least you shouldn't be, because you're going to get hurt if you're still in those meme stocks when times gets ugly, because those are short-term plays. If you're going to play those games, fine, but you need to get out before things get ugly, because those are not long-term plays. Everything I'm saying here is about the long term. So if you're trying to swing trades, meme stocks and cryptos and meme coins and all of that, yeah, maybe you probably should get out before things get ugly. But if you're investing in great companies and they're making money, you understand what they do, you understand how they make their money, why their customers love them, and you don't see that changing, you don't think that their customers are just going to stop loving them overnight because the stock market went down. Customers don't know about the stock market. I used to love Google and Samsung phones and laptops and all that stuff. I didn't know about investing when I was a kid, or even in college. I didn't know all this stuff. All I knew was that Android was great, that Google made great products. I loved them. I had no idea the stock market was crashing. Same with Amazon. I had no idea the stock market went down or even up. I had no idea of the concept. I wasn't investing. But those businesses were still doing extremely well despite whatever stock market or whatever markets are out there who are tracking them. Because they don't care. The good businesses don't care about the stock market movements in the short term, because they believe in what they're doing. And they believe that so long as they continue to serve their customers and continue to do that well, and increasingly so, increase their lifetime value of their customers, decrease their customer acquisition cost, increase their margins, have optionality to offer their customers more services that they need. If they continue to do that, they know that they're going to continue to have great customers who love them. And that means they're going to continue to make more money and continue to be a profitable, or at least approaching profitability, business. So if things are looking good and you understand what's going on and you don't think that a few rate hikes are going to completely crush the business that you're investing in, you have nothing to be afraid of with holding your money in the stock market. And actually, in fact, you should be happy, because if your company is growing by 65% revenues per year, if that's happening, they're growing by 90%, 40%, 30%. They're doing extremely well, high growth. They're increasing margins. They're nearing profitability. They're exceeding profitability expectations. If they're doing all of that, and then the stock market says their stock is worth less despite that, that doesn't make any sense. And they have enough cash in the balance sheet to sustain through a recession, and the stock still goes down 20%, 30%, despite revenues growing and margins growing. There's an inefficiency there. Something's not right. And usually it's the stock market, because as we said many times in the channel before, the majority is always wrong. You can't just invest based on what everyone else is doing. Because if I come to you tomorrow and say, hey, I see you have $20 in your hand there, can I take that from you for, I don't know, $5? I'll trade you my $5 for your $20. Wouldn't you be insulted? What kind of offer is that? Because your $20 is still worth $20. It still has the same productivity. It still has the same value. I'm just coming to you and say, hey, I want to buy it for less than what you think it's worth. Does that make any sense to you? It's the same thing with your stocks. Your businesses are still productive. They're still very valuable businesses because they're still making money. They still have cash flows. And those cash flows are still worth money. And if someone comes to you and say, hey, I see your business that you bought for $20. I'll buy it from you for $5. I'll buy those shares from you for $5. Would you take that deal? Does that make sense to you? Would you sell your shares, your stocks, because someone else comes to you and say, I'll buy it from you for 75% less? No, you wouldn't, because you're not dumb. You're not dumb, right? You're watching this channel, so I don't think you're dumb. I have pretty smart viewers. So I say all of this to say you have to stay in the game. The stock market is a great tool for transferring wealth from the impatient to the patient. I believe Warren Buffett also said that. Because those who try to time the market and get in and out really quickly and get rich quick, they usually don't succeed because it doesn't work. But even more so often, they actually get burnt. They lose money. And in fact, day traders barely make minimum wage in a year from their day trades. There's stats on it. CNBC reported on a study of day traders saying how they barely make $7.25 per hour for all of their day trading work that they do within a year. Because you can't time the market. You don't have a time machine. So everyone's telling you, hey, come buy my course and I'll teach you how to 10x, 100x your money on GameStop and on the next big stock. They're just lying to you to sell some course so that they can make more money and say, oh, look how the money I'm making. Come buy my course because I make so much money from other fools who believed that I could time the market. I'm going to teach them how to time the market too. And it just compounds. And then you see, oh, he's making $1 million a year from the stock market. But what you don't know is that he's making that money from telling people that he's making that much money. And so they should buy his course. That's how that works. It's a fool's game. He's fooling people. That's what you see in all these ads and all these TikTok investors and everyone on Instagram. Hey, they're not much different than a Tinder swindler. Everyone laughs at those women for believing that swindler, but they don't realize that there's a bunch of people on the stock market in real life who believe other swindlers who tell people that they can make them 100x in their money overnight just by teaching them 10 of their top secrets for making 100x in your money in the stock market. So if you're going to laugh at those women for being swindled by a guy who pretty much looked like a real deal, but you don't laugh at people who try to make quick gains on the stock market by buying some course from some guy who tells them from TikTok and Instagram that they can make them rich overnight. There's inconsistency there. Something's not right. You got to check how you're thinking about things, right? So there are so many reasons. I could go all night on this. It's freezing out here. My hands are getting cold. I have gloves on. But I could go all night on why you need to stay in the market. If you're selling today when the stock market is down, your stocks are down 20%, 40%, 70%. I've been there. I've shown you guys my stocks. I've shown you being down $200,000 in a year, 70% of my portfolio. I've shown you all of that. But that's part of the process. And when I'm down 70%, I see that as a discount. I go to the Nike store and I see all the shoes on sale. I don't run away. I came for shoes and they said, oh, you can get it for 70% cheaper. Why would I run away from that deal? I get what I wanted, but cheaper, 70%. And so you need to understand that investing is about equity, acquiring equity so that you can benefit from the upside potential of that equity, ownership. And so if you can acquire more ownership, more equity over time. I'm Lincoln and you are watching bullacademy.org. If you enjoyed this video, please do remember to like it below, subscribe to the channel, hit the notification bell, and comment your thoughts below. All of your engagement means a lot to the channel and helps us grow because YouTube's algorithm won't recommend our videos unless you engage with it. Thank you, and now let's hop in. The more equity you have, the more upside you get to enjoy. And so if you can get that equity for cheaper, then you get to enjoy more equity, more upside for cheaper. It's a very simple equation. You want more equity, just like you want shoes from Nike. You go to buy equity and they say, oh, it's 70% off today. It's 30% off. It's 15% off. Do you still want this equity? It says it's red. It doesn't look pretty. People are running away from it. They might be irrational, but hey, they're running. So do you want to run away too, or do you want this cheaper equity? You can have it. Do you want it? And so most people are going to say, no, I'm afraid, because I see everyone else being afraid and running away from that cheaper equity in a great business that is still growing by 20%, 50%, and acquiring more customers, decreasing their cost of acquisition of customers, increasing their margins, upselling their customers on other products that they have. They're doing all of that, and everyone's running away. So maybe I should run away too. Well, you're not dumb. And so you don't run away. You say, hey, 30% off? Why wouldn't I take that? 70% cheaper? I can acquire more equity today and then hold it for 5, 10, 20, 30 years and benefit from all that upside potential? Why would I not take that deal? Why are they running away? And so you ask yourself, what is this business doing? How do they make money? Why do people love them? Do they plan to make more money? How do they plan to do that? Are they going to decrease their cost of acquisition, their cost of doing business? Do they have enough cash on hand to survive a recession without completely laying off half of their staff? Is their business future-proof? Are they doing something that enhances our society, provides value into the future, and helps us get to the next stage of our future of industry? The electric vehicles, the future of banking, the future of internet security, e-commerce, developing nations, providing them value. Are these businesses, are they doing this? Any of this, and all of them? Is this a good business? Because that's what the equity is for. You're not just buying chips, Mario coins. You're buying equity in a business. And so you want to know if that equity is going to be valuable in the future. Because the only way to succeed on the stock market, to increase your chances of success, is by holding for long into the future. And so if you can get that equity in a great business today for cheaper, why would you not take that deal? I don't understand. I don't understand why people are running away from the stock market. There's just so much proof. Of course, we all know that past success and performance is not an indication of future success and performance. We all know that's real, but the charts, they've gone up and to the right over the long term. When you hear people say to the moon for the meme stocks and the cryptos, that's because they're thinking about going up and to the right in a day, in a week, in a month, because they want to get in and get out, because they want to get rich quick. But they don't understand that the people they see doing that, they're either lying or they are the outliers, and they're falling to survivorship bias. The people you see succeeding in all that get rich quick scheme, they're either lying to you, right? Or they were the outliers. Those exist. Yes, there are people who get rich extremely quickly. People who turn from nothing to something overnight. Literally. But most people don't do that because they don't give themselves enough time to succeed overnight. They don't give themselves time to be an overnight success. And so we get back to where we started. What divides the overnight success from everyone else? How do you make an overnight success story? How? Well, it's very simple. The overnight success, the only thing that separates them from you and everyone else who is not them, is that they were able to get through the night. And so what you have to ask yourself is, can you get through the night? Can you survive to see the next day? To reap the benefits of holding for the long term. Great businesses that are making money, that are increasing their customers, that love them, and decreasing the cost of acquiring those customers, and then offering them even more services, and vertically integrating, and horizontally integrating, right? Optionality. That's a big part of all of this. Because when things go bad, you want to have options. And when things are going good, you want to give your customers options so that they can get the best of whatever there is in the market. And so that's why you see me invest in companies like SoFi and Cloudflare and Open Door and Jumia, right? These are the type of businesses that I believe in because they have optionality. They have staying power. They're fast growth. They're leaders in their markets. And they're decreasing their cost of acquisition. They're increasing their margins. They're growing fast. They're leading us into the future. From Jumia in Africa with the developing nations, helping them build e-commerce and get online and offline with logistics. Jumia for logistics, Jumia Pay. And we have SoFi pushing the boundaries of online banking, of banking in general, offering customers the whole suite of services in a much better package than everyone else, and then offering everyone else the technology to help them compete with SoFi, because competition isn't bad if you can win from it. If you can benefit from your competitors, why not? And so SoFi does that. Cloudflare, same thing. We have wars, we have cybersecurity, or we have cyber warfare going on, and fears of that. They benefit from that. The main thing they do is DDoS security, denial of service attacks, helping people survive that. And so we see Russia and we're afraid, hey, what's Russia going to do? And some people say, hey, Cloudflare, can you help me? And Cloudflare says, yes, why not? But we also have these other services. We can help you build your website. We can help you build Edge and AI and all this stuff, and delivery of your content to your users and your visitors as optionality. So they can do all of that and keep their customers happy and keep them for the long term. Because if I'm investing for the long term, I want to have my businesses that I'm investing in also investing for the long term, because it doesn't make sense if I'm trying to invest for the long term and hold these companies for the long term that they are then trying to get quick wins and get out and just burn out. If you're going to invest for the long term, invest in businesses that you believe are going to also be investing for the long term, that are investing in their future. And so that's why I choose growth, because the companies I'm investing in, they're going to grow with me. I started investing soon after college in the stock market, and my businesses are just getting started. And so we're on the same page here. I'm investing for growth for the long term, and they're investing for growth for the long term. And so we both win because we're aligned. And so I'm not investing in the AMCs and the GameStops and all of that, because I don't see those companies surviving into the future. Everything I'm investing in, everything I believe in goes against them. So why would I invest in that? Invest in what you believe in. That's what we say here, is the bull mentality. We invest for the long term by practicing the bull mentality. And the bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term. Because that's how we build wealth on the stock market. That's how we give ourselves the best chance of success on the stock market. So it's really that. It's really that simple. Stay in the game. Don't leave the court. You can just sit there. If you don't want to buy anything, you don't want to take any shots, just sit there until you're ready, until you have enough savings to invest money that you don't need for the next year, 2 years, 4 years. Because we've seen over and over again that these bear markets, these downturns, they last a few months to 2 to 4 years. And since 1929, we've seen them recover within 3 years. And so if you're investing money that you don't need for 3 years, you should be all right. You shouldn't have much to fear. So all these analysts, again, you can't just listen to these people blindly because they don't know what they're talking about. Or they do because they're pretty smart people. But their job is to try to maximize their returns. And if they can do that by reaching millions of people watching them every day, by telling them that the stock market is going to crash and that they should sell their stocks, and so that they can go in and then buy those same stocks that their viewers are selling for cheaper, they're going to do it. And they're gonna benefit from that. And so you can't listen to these people. They're not on your side. I could come out here and tell you, hey, sell all those stocks, and then I can go behind you and buy them. I don't do that because I have no interest in doing that. I don't need for you to fail or do worse so that I can do better. Because I have an abundance mindset. Because we can all win. It's not a zero-sum game. There's enough businesses to go around. There's enough investments to go around. Heck, if you invest in SoFi, great. I'll be happy. Because then that tells me you believe in them. and you're going to try them as a customer. You're going to love them. They're going to get more customers. You're going to tell your friends about it. We all win. So I don't have any interest in doing that. But these people on the TV, they want to maximize their profits so that they can go to their fund investors and say, hey, I got you 6% over 5 years. Well, that's awful, but their investors don't know better. And so they win, their investors win, and everyone's happy besides you because you sold your stocks so that they could buy it. And so I've been going on and on, but that's all I have to say tonight. Stay in the game. If you want to be an overnight success, you have to survive through the night. So when the market goes red, you bunker down, make sure you have enough resources to hold you over, and see through the night. And as you acquire more resources over time, you stay at your job, you make sure you're doing well so that if there's a recession, you don't lose your job. And if you lose your job, you can go get another job easily because you're a great employee and you know how to serve and provide value to your companies. Then you'll do well. So invest in your career so that you can be at least secured in that department. So that when things go wrong, you don't have to fear losing your job or not being able to get back into the market, into the job market. And then as you collect your checks every month, every 2 weeks, you save what you need, you pay your bills, and you invest at least 10 to 15% of your income every month, or save it if you want to sit a little bit, and then find great deals. It's not a rush, but remember, the best time to invest was yesterday. The second best time to invest is today. So if you invest sooner, you have a much better chance of doing better. If you're dollar cost averaging. So you keep your job, you get your paychecks, you find great companies, you do your research, you understand what's going on, and you believe in the companies you're researching, then over time you acquire more equity for cheaper, and you're happy with that. You don't cry when it goes red, because when it goes red, remember those Nike shoes? I came to buy those Nike shoes, and now they're cheaper. Why would I be upset about that? Why would I be upset about getting more value for cheaper if I believe that in the future it's going to be even more valuable to me? That's the equity game. Cheaper equity. That's the game. That's all it is. Acquiring more equity for cheaper. If you're in the game for long term. Of course, there's a different story when you're trying to retire, but we can get into that later. Today, this is about the growth when you're still young like myself and you're still trying to build wealth for the future. You have to focus on trying to acquire as much equity for as little as possible. Even if you're not getting the best price, it's still better to get in sooner than later. You don't need to get the best price to do well. But if you acquire more over time, up and down, you're going to do very well for yourself over 40 years, even 10, 20 years. So that's all I have for you. My nose is starting to run. I'm sorry if it is already. It's freezing out here. I'm in New York, and I'm out here in the cold at night. Not the smartest thing to do, but I gotta put on the show for you all. So I really hope you enjoy this, and I hope you learn something new. I hope that this helps you get through the night, so that we can all be celebrated once we all are overnight successes. And everyone says, wow, how do they do it? It's so amazing. They just came out of nowhere. They're so successful. They're overnight successes. And you say, overnight? Overnight? Do you know what I had to go through? This took forever. This took a long time. It was hard emotionally to stay in the game. But I did that by staying in the game. I stayed on the court. I played the game, I stayed in it, and I held for the long term so that you could see me today in the light that is now brighter because I stayed in, acquired more equity so that you could say to me, congratulations on your overnight success. So I really hope you enjoyed this. If you did, do me a big favor, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts. I would love to hear from all of you. Let me know how you're feeling. Let me know what you're investing in. I'd love to see if we are investing in similar things and learn from you, learn from the community, so we all have something to learn from one another And that's why we're all here. And of course, as always, I can't forget this, my producers in the background who helped me put on this show and run this channel and keep it going. Our patrons at patreon.boacademy.org who help me think of new video ideas to show all of you. And we share news, rumors, and investment ideas in our Discord channel so we can all do our own research and then come back together and collaborate so we can all do better and continue to invest for the long term. So if you're interested in any of that, I would love to see you over at patreon.boacademy.org. I'm Lincoln with boacademy.org. Thank you again and have a great night.
What you doing?
Recording a video.
What do you mean like a video? What do you mean?
You watch YouTube?
Oh, what do to watch? I mean,
Yeah.
about what?
So investing.
Oh, what's the channel called? I can
Do you know what investing is?
No.
It's when you have money, you save it up, and then you give it to somebody else to go make more money for you. And then you get paid for it.
Oh.
So instead of you working, they work, make you more money, then they give you back the money.
Oh, that's nice.
Yeah. So I'm teaching people how to do that.